Ladies and gentlemen, today we are here joined by the man, the myth, the legend, Mr. Ben Cowen from Into the Cryptoverse. If you're here from our Twitter profile and you just finished tuning into our Twitter spaces, welcome to our stream. Ben, thank you so much for joining us. We're here joined by Max, Edward, and Tucker. I'm not sure if Tommy is in here. He might be hiding somewhere. But regardless, Ben is here as a special guest for our FOMC special edition show. How are you doing, Ben? What are you seeing in the markets? Great to have you on the panel. And great to have you on the panel. Great to have you on the stream. Sorry, guys. I'm kind of used to Twitter spaces. But Ben, welcome to the channel, man. It's great to have you here on our YouTube for the first time. And yeah, man, what are you seeing? And what's your anticipation going into the second half of the year? It seems that the market is now pricing in an additional 2 rate hikes. And, we do have certain pockets within these markets that are sort of intaking this as bullish news. As we see this year, like anytime Chairman Powell has raised rates, the market just keeps on pumping relative to, last year. If we compare it, anytime Powell would raise, the market would just crash to the downside. And now we're seemingly crashing towards the upside, at least in the equity markets. Bitcoin has kind of been in this 27, 26 to 31K range for the last, what is it now, guys? Like 3-4 months now. So welcome back to the channel. We'll take it on over to Ben now. I know he has a few charts for us.
Yeah, sure. So yeah, we definitely should clarify which markets, because as you did, right, like some markets seem to be going up, some don't seem to be going up. The S&P is as I've said before, right, it climbs the wall of worry. I see some people say they should take a shot every time I say the S&P is climbing the wall of worry, because I say it quite frequently. But in general, the S&P, can you see my screen, by the way?
Yep, looks good.
Yeah, so in general, we've seen like the S&P climb the wall of worry quite frequently in pre-election years. I was actually just looking at this chart. So this chart right here, if you look at the S&P 500 in the pre-election years, right? So like this is 2023 and this is 2019. And you can see what it did last time. We also had an inverted yield curve back then too. If you go back to 2015, it was climbing the wall of worry to some degree, but this was also a recession scare. It was not a recession, it was a recession scare. And it was around that August, September timeframe that we actually saw the S&P sort of fall back in. You can go back through history and see that historically the S&P likes to climb the wall of worry. What I found earlier when I was looking a little closer at this is there does tend to be some seasonality with this, right? So if you were to average out, like let's look at 2023 for the S&P. If you were to average out like let's just say like the last 5 pre-election years, just to get a good sample, right? So 2019, 2015, 2011, 2007, and 2003. Right, so let's just and why don't we add in 1999, because that was a pretty big year as well, because we know that was leading into the dot-com crash. So we'll go ahead and add 1999. If you add that series onto this chart, this is what it looks like, right? The blue line. And what's interesting is what you see is there's like a seasonality associated with the S&P 500 in the pre-election year. But oftentimes when you get to that August-September timeframe, the S&P does start to show some weakness. Now, there are plenty of times in history where it shows weakness in August, September, but then it rallies back up in Q4, right? And I think the question of whether it's going to rally in Q4 would more so be dependent on, does the Fed get what they want, right? Do they get a mild recession or at least a softening of the labor market by the end of the year, which is what they want. Whether they achieve that by the end of the year, of course, is a different story. But when you look at this, I think it's worthwhile to know that there is some seasonality to the S&P 500. Now, the reason why this is important is because there's this other sort of like, the elephant in the room, right? Is, well, why isn't Bitcoin doing anything? We've seen the S&P climb the wall of worry. Bitcoin's been stuck. No, it hasn't moved at all, basically, for the last several months. What's interesting is Bitcoin also has seasonality in pre-election years, but it's different from the S&P 500. And for Bitcoin, I think what's more important is not the fact that it's pre-election year, but what's more important is the pre-halving year, right? So with Bitcoin, it's a little bit different in terms of how it behaves in its pre-election year, pre-halving year, whatever you want to call it. And if we pull up Bitcoin and look at, let me reload this. If we pull up the Bitcoin, year to date, I got to go to the crypto tab. We pull up the Bitcoin year to date ROI and just look at the prior pre-halving years. What we've seen is a lot of seasonality around the June to July timeframe. So every single pre-halving year that we've seen Bitcoin find either a yearly high or a local top before a double bottom, sometime in late Q2, either June or July, right? Now, if you look, and let me get rid of this really quick. There's this 20-week SMA, 21-week EMA, bull market support band that I use to sort of navigate whether Bitcoin, where Bitcoin is in its cycle. But what you'll see in legitimately every pre-halving year is that Bitcoin fails to hold the line in Q3. Okay, so if you look at 2019, Bitcoin failed to hold the line, right, at the 20-week SMA. So far, it's stayed above it. In September 2019, it failed to hold the line. If we go back to 2015, where did Bitcoin fail to hold the line? It was in August of 2015. And then where did Bitcoin fail to hold the line in 2011? In, again, the pre-halving year. Again, it was in August, right? So we have 3 pre-halving years that we can compare to. Now, I'm not asking you to take it to the bank, right? There's always, of course, a chance that this time is different. But with that said, we know there's seasonality with Bitcoin. Now, what's interesting is what did it take in 2019 to get Bitcoin to fall below this 20-week, right? There was a correction by the S&P 500, right? And I just showed there's some seasonality now with the S&P 500 that as you get into that August, September timeframe, it does tend to show some weakness, okay? And the S&P, it just came off, it's coming off of a pretty massive rally here. We were talking a little bit about this before the stream. This is a pretty massive rally. And so, you could have a scenario where the S&P gets some type of pullback, not even necessarily to say that it means recession now, like the recession that is in the news and whatnot are being sort of forecast. That could still be several months away for all we know. Where I would argue that we're only just now entering the window upon the initial inversion of the yield curve that you even could theoretically get a recession. But whether we see a recession or not, the S&P could easily pull back here. There's this prior resistance level turn potentially support right around 4,300. It could come back in. But the issue for Bitcoin is that if the S&P does experience that seasonality, that negative seasonality going into that August, September timeframe, like it typically does, especially in pre-election years, the issue is that Bitcoin could fall below the bull market support band, right? And normally when it does that in the pre-election year, it then kicks it into a downtrend for at least several months. And then sometime between August to late Q1, we see either a higher low, a double bottom, or a lower low, right? Historically, we saw a higher low last cycle before that, it was a double bottom. And then, of course, we could speculate on what it's going to be this time. But that's where I think we are. I think we're in this phase where people are getting frustrated that Bitcoin hasn't made a move, but this is exactly what happened in 2019. If you were to overlay the S&P on this chart and look at what happened in 2019, the S&P continued to climb the wall of worry in the second half of the year, even though Bitcoin sort of topped out. And you can see right here, right? Look at where Bitcoin failed to hold the line right here. It happened on a very brief dip by the S&P 500 that again occurred in that August to September timeframe. And we find ourselves in a very precarious position again, where if the S&P does anything bad, right? Like if it drops just even 5%, it could lead Bitcoin back below the 20-week SMA. And I think that's where we are. And if you go further up the risk curve, right, and you look at the altcoin market, they can't even muster up the courage to get above their 20-week SMA, right? They fell below it back in May. And, in last cycle, we saw altcoins fall below their 20-week SMA a couple months before Bitcoin did, right? Like they fell below it in July. Bitcoin didn't fall below it until late September. This time, altcoins fell below it in May. Here we are. So that's where I kind of think we are right now. We're entering into that seasonality where the general expectation would be for Bitcoin to sort of show some weakness. And that also, the weakness would also come not from Bitcoin per se, but I think that Bitcoin, unfortunately, still needs to crush the altcoin market, right? And I don't say this from a place of like, I'm not trying to say it from any high place. I'm saying, look, guys, like I've lived through this cycle many times, and I mean, boy, did I get wrecked, right? Boy, did I get wrecked in prior cycles by getting into altcoins too early. And I mean, here's a great chart of total 3 minus USDT divided by the market cap of Bitcoin. And I mean, it really shows you last cycle we were more or less at the same valuation on alt Bitcoin pairs as we are today. And come late Q3, the altcoin market, rather than being 46% of Bitcoin's market cap, had fallen down to about 25%. Notice the nice round numbers here, right? The tops on the altcoin market occur when they reach parity with Bitcoin's market cap, right? This is when they reach basically 1. The lows against this occur at about 0.25. So look, if we see altcoins drop against Bitcoin another 40 to 50%, then we're getting into the realm where perhaps they're at a somewhat fair valuation against Bitcoin. Not to say, I mean, look, there are some altcoins that can just go to zero, right? But for the altcoins that will survive for the next cycle, it's down at these levels that I think you start to make the case that it's worthwhile. If you're going to hold something in crypto, it becomes more worthwhile to hold something besides just Bitcoin once you see the altcoin market at about 25% of Bitcoin's market cap and looking at a dominance of Bitcoin above 60%. I've rambled for a while. I'll let you guys take over for a little.
Ben, I did want to mention this before we go on over to Tommy. Before you typed something out, with the tickers, I noticed a certain token that this community holds near and dear to their heart, KAS. Did you have you checked out that chart by any chance, Ben? It looks like one of these tokens that have just been rallying up and up and up throughout the entire year, and it's sort of like this stealth mode bull market.
Which one?
KAS.
Oh yeah, I think I did look at that earlier. There's some people talking about it in the chat room. Yeah, I did take a look at it. I don't know which
Oof, man. If you go on the
this is a great example though. I mean, look, the sort of the thesis on altcoins bleeding back to Bitcoin and the thesis on, say, like Bitcoin dominance going higher, it doesn't mean that every altcoin has to underperform Bitcoin, right? Like a great example of that is like, look at Chainlink in 2018, 2019. It's a great example. And maybe this is an example for this cycle. I don't know. I just looked at it for the first time today. But if you were to look at Link Bitcoin's chart last cycle, it was a great example of how the general thesis on Bitcoin dominance going up in, say, the bear market year and the pre-halving year, while it is true that most altcoins bleed to Bitcoin, it's not necessarily true that it has to happen or has to apply to every single altcoin, right? So here's a great example of Link going up starting in the summer of 2018, and it basically rallied against Bitcoin for a couple of years before ultimately topping out, right? So yeah, I mean, like that's a great example. Like we can always find some altcoins that will outperform. My view on it though is that like during this phase of the cycle, for me anyways, like I have a really hard time exactly predicting which ones those are going to be, and it's also hard to get behind like coins with really small market caps. Like I have to be careful about what I talk about. But yeah, like for sure, like there's examples to be made everywhere. Like it's not that every altcoin bleeds against Bitcoin during this phase. It's that like 99.9% of them do, but you can always find a few that outperform.
The way that I sort of use something like KAS, and it's just my own personal take on it. Again, you could tell me I'm wrong. That's fine too.
Is that this one?
Yeah, Caspa, is that it didn't have a cycle before. I imagine that most of the altcoin carnage that's to come is against coins that had a cycle, between 2019 and 2021. But something that's just launching that has a really strong and, committed community could potentially have its own little mini cycle before the next true crypto asset class cycle. So there's always going to be an outlier, of course.
Right.
But I mean, I imagine a lot of the large caps from last cycle, BNB, Solana, Matic, are going to bleed against their Bitcoin pairs more or less in perpetuity until the crypto asset class sort of oscillates and resets as a whole.
Yeah, for sure. I mean, a lot of times what you should do going into a new cycle is oftentimes having one that doesn't have any baggage from the prior cycle. Having a couple even is not usually a bad idea, because they don't have all the back holders from the last cycle. They don't have, the people that are going to sell at every resistance level all the way up. It just has a clean chart, right? So typically getting a couple coins that, have no baggage from the last cycle is a good idea going into a future cycle.
Yeah, I noticed that Tommy has his hand raised. Zoom kind of works weird like that. Like whenever there's multiple people, you're not able to see all the screens at the same time. But Tommy is an individual that lives in the on-chain markets and is a massive fractaler. So I think we can kind of start drawing some comparisons between the seasonalities as Ben was describing. But I do see that we have a little over 200 listeners at the moment. And guys, if you want to help out the algorithm, smash that like button. Feel free to ask any questions you want to ask us there in the little chat box. We're here with Ben Cowen, and we're going through some dubious speculation. But I digress. Snorlax, Tommy, go ahead, brother.
Hey guys, yeah, Ben, I wanted to ask you kind of more about the on-chain market specifically, because I know when we look at Total 3, for example, it can't really quantify a lot of the liquidity inflows and outflows that we're seeing, onto decentralized locations, right? And so I kind of wanted to ask you, what is your opinion of some of the massive level of, it's a pretty ridiculous level of speculation on chain right now when you look at exactly, the things that are pumping. And meanwhile, you have exchanges where volume is completely dying off. And then I also wanted to get your opinion on how that relates to Ethereum and almost creating, I wouldn't call it you could call it a float, right, on price when, people are denominating all of these on-chain assets in ETH or Ethereum. So I do think it kind of, does create a little bit of downside protection as long as, on-chain markets are risk on. But it is, it's a very interesting dynamic right now where you have, I would call it apathy for a lot of these alts that you can trade on exchanges, whereas on-chain markets, there's a lot of participation and a lot of liquidity inflows.
Yeah, well, I think it's sort of an artifact of all the excess liquidity that was created a couple of years ago. It's really hard to remove all that excess liquidity, even with interest rate hikes and QT. It's not just going to evaporate overnight. You still have a lot of NFTs fetching tens of thousands of dollars, if not hundreds of thousands of dollars, right? So there's still ample liquidity out there. With that said, the NFT market has taken a bit of a hit recently, I believe. Some of them have actually come down quite a bit. But yeah, I think it does show that there is still a vibrant community there, right? And so my view on the altcoin market in general, it's not negative because I don't think there's any value there, right? Like I do think there's value in the altcoin market. A lot of people say I'm a Bitcoin maxi. That's not true. It's more so that most alts lead to Bitcoin over the macro scale. But when you do get in the altcoin market, you need to be very careful because we know how badly they can get hit in bear market years and pre-halving years. Sort of my more negative stance on the altcoin market stems from just like global net liquidity rather than say like the liquidity that you're looking at going into any specific chain. I would argue that a lot of the liquidity that we see going into the various ecosystems is more so a shuffling of existing liquidity from, maybe from like one network to another, rather than a lot of new liquidity coming into the space. The reason I say that again is because, even if you look at Total 3 up here, in general, if there was a lot of new liquidity coming into the space, then you would expect the altcoin market to have been able to take out its November 2022 high, right? Like the fact that it couldn't even take out its November 2022 high is sort of some testament to the idea that there really hasn't been a lot of new liquidity coming into the space. I think another way that you look at this, whether it's like new liquidity or if it's just sort of existing liquidity moving around, I mean, to some degree, when I say new liquidity, like if someone's investing in the cryptoverse and they're just putting a portion of their paycheck into crypto, then yes, maybe that's new liquidity. But when I talk about new liquidity, I mean like sort of like an army of the next generation of crypto investors, right? Like I don't really think we've reached that point yet. And I think the way that we visualize that is by looking at something like the social risk, right? So the social risk, for those unfamiliar, is made up by just simply looking at social statistics of things like on YouTube and on Twitter. Before I break this down, let me show you where it comes from, right? Like, so look at YouTube views to a lot of different crypto YouTube accounts. I mean, you can see it's been relatively boring for a while now, right? Like the views have really trailed off, and applying a 30-day moving average to this shows that we even recently put in a new low. And we can pick on myself as well, right? I mean, just look at this, how it just has slowly gone down. It's like if you overlay the social risk with the Bitcoin dominance, they're like inverses of each other, right? So like as dominance heads higher, social risk heads lower. And the thing that I and by the way, if you look at YouTube subscribers, you'll see it's even more dismal out there to a lot of new YouTube channels, right? So guys, if you're watching from my channel, I know I linked it a couple places. Make sure you subscribe to Guys Bitcoin. They're good guys. New startup here, so make sure you hit that subscribe button and show some support. But I do want to say, like, we take these YouTube views, take the YouTube subscribers, take Twitter followers to analysts, to exchanges, to player ones. We can then come up and then you normalize all of that between, say, 0 and 1, right? So you normalize it. You get a social risk metric, right? And it looks something like this. And what's interesting is that we are still in a series of lower highs and lower lows, right? We have not broken that yet. Just a couple weeks ago, we were putting in new lows on the social risk. And we also have altcoins putting in new lows as recently as a few weeks ago, right? I think we saw Cardano, Avalanche, Chainlink. We saw Polkadot. I think even recently, like within a couple weeks, we saw Algorand, right? A lot of these altcoins are just simply putting in new lows. And a lot of people are like, well, how can that be, right? I mean, Bitcoin's at 30K, right? Well, the reason is because there's no new liquidity coming into the market, right? It's just the same people, just chasing the most recent thing. But it's sort of net. You can see that interest has been waning in the cryptoverse. So then the question is why is that? Why has interest been going away? Because as you said, right, you can go to any specific DeFi protocol and see that there are people. It's a vibrant community. Like there's people that are participating. But how can you have like the Cardano DeFi ecosystem showing a lot of interest, or how can you have Ethereum showing a lot of interest or whatever, but you still see price action that doesn't really support that? And I think the reason a lot of this comes to be is because of net liquidity. So not liquidity specific to the cryptoverse, but overall global net liquidity. So this yellow line here is global net liquidity. So what this means is that it's basically just, if you add up the central bank's balance sheet, right? So you go through the United States, you go to the Fed. We're about to have another rate hike today, right? But if you look at their balance sheet, you have the United States, Canada, the UK, the ECB, Japan, China, Australia, and New Zealand. That's who I put into this metric. I subtract out the TGA and the reverse repo. You get sort of an approximation for global net liquidity. And my argument here is that the altcoin market more or less tracks global net liquidity, right? And you can see it's a pretty good comparison. So it more or less tracks global net liquidity. And that means that as liquidity is taken out, the riskiest of assets, like altcoins, will struggle the most. Equities don't struggle as much because they rely on a lot more than just liquidity, right? I mean, there's earnings calls. They're always putting out new products, right? There's all sorts of other things that an equity, a stock can point to as the reason why the valuation may go up. There's also a lot of passive investors in the stock market. Like everyone's got a 401k. A lot of people are just sort of passively investing in the stock market. Crypto doesn't really have that same type of thing. I know some people DCA on a weekly basis, but it's not the same thing as someone putting like 10% of their income into their 401k, and you multiply that by millions and millions of people. S&P likes to climb the wall of worry. But in terms of, if we think about liquidity, excess liquidity, when there's a lot of excess liquidity, like in 2020 and 2021, that excess liquidity, it has to search for a home, right? Because it wants to find yield. And so the more excess liquidity there is, the more likely it's going to go into riskier assets, right? Like if you have, let's just say you're flush with cash, maybe you say, all right, well, I want to put 80% of it into stocks and 20% into altcoins or something, right? If you don't have a lot of excess liquidity, and you have a tenth of that, then you're probably going to be a little bit more conservative, and you want to make sure you preserve what you have. What I see is that the total three, the altcoin market, continues to track global net liquidity. So I would argue that when global net liquidity turns back around and we start printing again, the altcoin market's probably going to go up. It's not going to go up just because they're printing. It's also going to go up because I think there's actually real utility in the cryptoverse, in the altcoin market, right? I think there's utility in the altcoin market. It's just that doesn't matter when liquidity is being drained, right? From everywhere. If liquidity is being drained, it just doesn't matter as much. And if you look at the global net liquidity chart here, you can see that it bounced here in October, November, January, just like total three did. Now, why did it bounce? It was not because of the Federal Reserve. Well, maybe the one in March was, when they came to the rescue of the regional banks, but it was more so because they came out of the East, like the Bank of China and Japan were starting to print, right? So we saw the reopening of China, and we got a lot of printing out of the East. But now that's kind of come to pass, and now you can see global net liquidity is going down. The other issue is that all of this is denominated in US dollars, right? So if the US dollar is weak, if the US dollar is going down, then net liquidity goes up because we then convert, we convert the euro to dollars, and if it's a more favorable trade, then there's more purchasing power of euro. The issue, of course, is that the dollar has actually gone down a lot recently, and any type of bounce here sucks liquidity back out, right? And so, I mean, that's kind of what we're seeing right now. Like, the liquidity has been going down for 3 months, even though the dollar's been going down. So what happens if the dollar turns back around and goes up for any period of time while the ECB and while the United States and while all these other central banks are removing liquidity from the system? So my argument here is that the S&P does not depend on liquidity nearly as much as the altcoin market does. Yes, you can look at the DeFi community and see vibrant communities everywhere. But until we get back to more favorable monetary conditions, and it might even start beforehand, like maybe a couple of months before we get back to favorable monetary conditions, I think the altcoin market is still going to be struggling.
And Ben, on the topic of global net liquidity, something I know that you've done some analysis on is the S&P 500 and global net liquidity overlaid, and you've described it sort of as the jaws have opened. Have you done any additional analysis on the average amount of time sort of between these divergences and how long it takes for them to sort of these jaws close back up?
Yeah, the answer to the question is not really. I mean, I've looked at the last 2 cycles, and I think one time it took about a year, and the other time it took like 4 months. So you're referring to these jaws right here. Yeah. So basically, the idea here is that once upon a time, the S&P was also tracking net liquidity until it wasn't, right? And then it started to diverge. Now, does that mean that this time is different, right? Like that it's no longer going to track it? Well, if you just go back and look in time, right, there's previous times where the jaws sort of opened up on the S&P 500 and global net liquidity. And these 2 examples here, right? I mean, this one took about 32 weeks for the jaws to close. And then this one took about 62 weeks for the jaws to close. So, I mean, there's no telling how long it's going to take. It could be half a year. It could be a year. If you look so far, the jaws opened in April, right? So you can see here, or maybe even late March, early April is when the jaws opened. So it's already been about 18 weeks. So, I mean, you could have a path here where you get some type of correction August, September, which is fairly seasonal. It could still climb the wall of worry, right? But it doesn't mean that it's going to go up forever, right? It could eventually come back down and tap that global net liquidity line once again. But I mean, it would probably require a recession to do that, or some major geopolitical event. And so that's why the S&P can sort of ignore that for a long period of time. It needs to either see the labor market soften up, or if inflation reaccelerates is another potential issue. But I think the bigger risk, of course, is the labor market, and there's still a lot of job openings. Initial claims are still averaging, the low 200,000s. Until you see initial claims like over 300,000 and holding that for a sustained period of time, you're probably not going to see a material change in the unemployment rate. And so that's still likely. I would guess we're not going to see the jaws clamp shut for at least a few more months. It doesn't mean that you can't get a short-term correction. We probably will see a correction in the S&P sometime the next couple of months, like to the tune of 5 to 10%, and that would probably break Bitcoin off of its support level. But that doesn't mean that it has to be like, quote unquote, like the big one, right? Where it actually comes back down to lower levels. That could still be a ways off. It could be next year for all we know.
Ben,
In regards,
are you looking at accumulating some of the alts that are hammered down 90+%, or are you going to wait for these new narratives to pop up?
So I'll tell you what I do. And this is I've sort of learned this through trial and error a couple of times. So we talked a little bit about this chart earlier, right? So this is just like altcoin market over the altcoin market percentage of Bitcoin's market cap. Now, I think sort of the knee-jerk reaction would be to assume that if we come down here, then that would be sort of where altcoins are finally worth the risk against the US dollar. That's not necessarily true. They might just become worth the risk against Bitcoin by that point. If you overlay total 3, so look at what's happening over here with total 3 kept going down even after altcoins had bottomed against Bitcoin, right? So we know that just because alts find their bottom against Bitcoin, it doesn't necessarily mean that they bottomed against the US dollar. To just give you a clear example of that, look at ADA Bitcoin. So I'll tell you exactly what I'm looking for. And again, like, you can apply this to any single altcoin, right? So if I'm not talking about an altcoin, if you're in the audience and I'm not talking about an altcoin that you have, just go look at it like this. Like, look at it like this. First of all, if your altcoin is putting in higher lows against Bitcoin for the last 6 to 12 months, then congrats, right? I mean, like, that's a great thing. And that happens every cycle. There's always some that do that. Most of them are not. Look at what ADA Bitcoin did last cycle. Look when it bottomed. It bottomed in Q3 of the pre-halving year. That did not mark the ADA USD low, right? It did not. And the ADA USD low came a lot later. It came early the next year. But even if it hadn't been a low, the ADA USD valuation still trended down for several months, even after ADA Bitcoin found its low. But the key thing to remember here is that the altcoin market, whether you look at Cardano, whether you look at total 3 over Bitcoin, the altcoin market did not actually bottom against the US dollar until after it bottomed against Bitcoin, right? Collectively, right? I mean, again, there was, if you look at total 3, you'll find that the low came in early 2020. Of course, people are going to say it's a black swan event, but look, we had an inverted yield curve in 2019. We have one in 2023. You could see it'll probably be called a black swan, but it is what it is, right? Like, whatever it's going to be, could yield those final lows on altcoins. I would look for this. Look for the altcoin that you're interested in. See if it's holding these lows against Bitcoin first in a Bitcoin downtrend. That's the key thing. So the altcoin market absolutely got destroyed. Like look at ADA Bitcoin. It's a good example of a lot of them, right? We don't really need to look at 100 of them. They're basically all the same chart. ADA Bitcoin got absolutely destroyed. And then, in Q3 of 2019, I remember just feeling beside myself. I'm like, what the hell is going on? Why is it just going down? It already went down 80% twice. Why does it have to go down another 50%? But it did. And it taught me a lesson, right? It taught me to really value this stuff on their Bitcoin pairs, because if you had waited and if you only became interested in ADA after it reached a point where it was holding these lows against Bitcoin, then it would have at least gotten you to, say, Q4 of 2019 before you even got interested, right? And that would have been a pretty good time to start getting into the altcoin market. Like if you had gotten into the altcoin market Q4 of 2019 and just started to DCA for the next 6 months, you would have been set, right, for the bull market. You'd have been absolutely set. Like, forget 2018, forget, all of 2019. If you just started in Q4 of the pre-halving year, after a lot of these altcoins had bottomed against Bitcoin, you'd have been set. Cardano's not the only one. I mean, you could even go look at Ethereum and see basically the same thing, right? I mean, like it bottomed out here in Q3 of 2019 as well. But remember, it wasn't until they bottomed out against Bitcoin that they even became worth our attention. So let me give you an example of one. So there's Solana, right? I don't own any Solana, for the record. I don't. But I want to show you guys this. I'm looking at it. I'm saying, okay, well, look at Sol Bitcoin. Well, why Sol Bitcoin recently has had a sizable pump, right? Now it's still within the context of the prior downtrend, but when you look at this, you're like, okay, we got a low here in late 2022. We have another low in mid 2023. So first of all, I'm like, all right, well, it held the low. It held its prior low. Now, that's not any shade against ADA. In fact, the reason why Solana Bitcoin has outperformed recently is because it got wrecked more earlier on. So it went down about 90% earlier. And if you were to go look at ADA Bitcoin, it hasn't gone down that much, right? So let me just pull it up because I just want to be fair to everyone here, right? If you pull up ADA Bitcoin from the highs, it only went down right? 86%, but it's currently down 83.5% against Bitcoin. Solana Bitcoin currently is down about 82% against Bitcoin. So they're basically at around the same point. Another way to, by the way, another way to visualize this just quickly, because I know I can just run with this stuff when people ask me questions, but if you look at the ROI after the peak for ADA and Solana, they're basically at the same point, right? It's just that Solana got wrecked more, and now they're up here. Now look at Bitcoin. So here's the thing. What happens if Bitcoin shows that traditional seasonality in the second half of the pre-election year and it fades back down? That's where the altcoin market can get wrecked again, right? Like they already got wrecked once. Altcoins like getting wrecked, right? That's what they do, except for in the like late halving year and the post halving year. And so that could lead them back down again. But I'm watching this because what you want to look for is if Bitcoin does roll over, right? At some point it will, right? Whether it's next month, whether it's 4 months from now, who knows, right? Well, at some point Bitcoin will roll over and go back down. And at that point, what you want to look for on your altcoins is, are they holding their Bitcoin lows, right? So like imagine Bitcoin drops like 30%, 40%, whatever. And if ADA or if Solana Bitcoin were to just come back down here and just keep holding these lows, right? Then that could be a sign that it might actually break back out to the upside. That doesn't mean the low is in on Sol USD. It might not be, right? But it would tell you that it might start to become worth the risk against Bitcoin, right? And again, like I think a lot of people, they'll just cherry pick the low and say, well, if I had bought it here, then I'd be up X amount. Yeah, I mean, hindsight is great, but let's say you carried out a DCA strategy starting in January 2022, right as the bear market was really getting underway, January 2022. If you put $100 into Bitcoin because you said, you know what, I don't know what way the market's going to go, but I do know that the dominance of Bitcoin is going to go up, right? Or at least I think I know that. I'm just going to put it in Bitcoin. The dominance will come later, right? You'd still be up 16% today, even if you started DCAing, the beginning of 2022. What would have happened had you started DCAing Cardano the beginning of 2022? You'd be down 31%. What would happen if you had DCA'd Solana beginning of 2022? You'd be down 16%, right? Again, Bitcoin, you're up 16%. Everyone keeps telling me that ETH is outperforming Bitcoin, but that's not true. And you can tell that by if you just look at ETH, you'd be only up 7%, right? Whereas Bitcoin, you're up 16% on a DCA strategy. And so the question, of course, becomes is, well, what actually ends the altcoin reckoning? And what actually gets us to the point where they've reached collectively their lows against Bitcoin? And I think the answer to that question lies in sort of the king of the altcoin market, right? I don't really consider ETH and alt, to be completely honest, but I think the collapse of Ethereum will mark the end of it. Remember, it was actually the collapse of ETH over here that marked the end of it for a lot of altcoins. And you know, it sort of had one low, had a second low, it then had another low, but this low was actually while Bitcoin was going up. So that wasn't, you know, it wasn't as necessarily as bad, but I do think that is sort of the last shoe to drop. And once the Ethereum Bitcoin valuation finally falls down, that would likely mark the end of the altcoin reckoning. And one way to visualize this is to just look at monthly Heikin-Ashi candles on the Ethereum Bitcoin valuation. It looks, to me anyways, it looks very similar to what we saw last cycle. It's just taking a longer time to play out. But I just can't help get past this idea that this is what's likely going to come. And this seasonality by the Ethereum Bitcoin valuation, right, is you know, in the second half of the year, it tends to be red. And again, I mean, don't take my word for it. Look at monthly returns on average for ETH Bitcoin. On average, the average return of Ethereum's Bitcoin valuation from June to December is negative. It's the first 5 months of the year where Ethereum tends to outperform. So you can see that June was negative, about negative 8%, exactly what the average was. So far, July is positive, but only by it's 0.04%, right? My concern here is that the Ethereum Bitcoin valuation could easily follow the average of what it normally does for the rest of the year. Sort of see the Ethereum Bitcoin valuation collapse into the end of the year, and then mark the sort of the final stage of the altcoin reckoning, and then we start a new cycle with altcoins, and then all the vibrant ecosystems that we've seen, they actually start to go back up again, because net liquidity is starting to go back up, because at that point, you know, who knows how much damage the Fed has done.
And Ben, one thing that I learned from you before last cycle, when I first found your channel, before your explosive growth, back when you just had a Google Doc and you were providing all of your analysis on it, that was a
Good
fun
old days.
time. Those are fun, man. Those are really fun. But yeah, anyways, one thing that it stuck with me all these years after initially finding you is there's really not a reason to hold an altcoin unless it's gaining against Bitcoin. So if the seasonality speaks to what could potentially be on the forefront for Ethereum against Bitcoin, imagine what's going to happen for your other favorite, like true altcoin against Ethereum. If ETH is bleeding against Bitcoin, what's Solana, BNB, ADA, AVAX? How are they going to perform against Ethereum, right? It's probably not going to look that great. And actually, through my analysis, the best time to buy Ethereum or rotate out of Bitcoin into Ethereum actually comes 6 to 12 months after the Bitcoin halving. Now, Ethereum hasn't been around for all of the halvings. It's only been around for 2 of them. But if you just look at when the halvings occurred and you look at the price action, you know, 6 months before the Bitcoin halving till about 12 months after, there's not much of an incentive to actually hold Ethereum over just holding spot Bitcoin. And you're intrinsically taking a lot more risk by holding something like Ethereum, which is more uncertain during that time period.
Yeah, no, I mean, for sure. That's why I think that's why, I mean, a lot of people think that the Bitcoin dominance is like a useless metric, but man, if you understand the dominance and like why it's important, it can really help. Actually, there's a really great visual I think that people maybe should take a look at. This is what really hits home for some people. The way to visualize this. So we all think about it in terms of like the ADA Bitcoin, the alt Bitcoin valuation, right? But what if you looked at it the inverse of that? That tells you the story that you need to know. Okay. The reason I say that is because in late 2021, one Bitcoin would have gotten you about 16,000 ADA, right? 16,000 ADA. Today, one Bitcoin gets you almost 100,000 ADA. That shows you the importance of the Bitcoin dominance, right? So, and again, it's not just ADA. You can go down the list, right? You can go down the list, basically every single altcoin, and perform the same operation on, just take one over your favorite alt. And I mean, look at these bull markets it's basically Bitcoin against that altcoin. One Bitcoin in November of 2021 would have gotten you about 1,100 DOT. Today, it gets you over 5,600 DOT, you know? So that's the reason. I mean, this is what you said, right? What's the point of holding the altcoin market when they just bleed against Bitcoin over the macro scale? So there is a reason to hold alts. And that is once they've bottomed out against Bitcoin and once liquidity returns to the cryptoverse, that's where those oversized gains come from, right? That's where the alt season that people want, that's when it comes. You know, how many times have you heard people call for alt season over the last 12 to 18 months? Hasn't happened, right? I mean, we've had some pumps, admittedly, but they haven't been that impressive compared to what people want. And normally it takes liquidity coming back into, you know, just into financial markets in general and crypto especially for, you know, for those altcoins to take off again. They probably will have their day in the sun again. I actually think they will. It's just that there's not really a great case to hold a lot of them for forever, right? The idea is you hold them for a year or two during the phase where they're going up against Bitcoin, and then you try to get out of them before the Bitcoin dominance rally starts. Because once the dominance rally starts, it's a wrecking ball, right? I mean, it Bitcoin wrecks altcoins on the way up, and then it wrecks them on the way down. And so that's, I think, by the way, you mentioned their Ether pairs. Actually, I was looking at ADA Ether. It's actually potentially it's sort of in this downward channel here, and it recently tagged it. You know, I wouldn't actually be surprised. I do think that if Ethereum were to collapse, like if the Ether USD valuation went down, I do think it would take altcoins with it. But there is a case to be made that some altcoins have already been bled, that they've been bled a lot already. While they probably would go down, they might actually go up on their Ether pairs in the short term if Ethereum were to go down quickly. Because I think Ethereum is one of the few that is still actually holding up relatively strong. But yeah, we'll see what happens. We'll see what happens with that. I mean, the Ethereum, by the way, just quickly, because I just mentioned ETH. It's an interesting week because, you know, there is seasonality with ETH as well. And, you know, this is the last cycle. It was the last week of July where we really got back below that 20-week SMA, 21-week EMA, that really sort of finalized this brutal part of this cycle. And then we got into the next phase. So that's what I'm sort of looking at is potentially one last fade. And then we'll go into a Fed pivot maybe sometime next year. And then the liquidity will return.
I love it, Ben. I love it. Yeah, I would love to I'd love to pick up some ETH around $750 if that
Oh, those are fighting words for a lot of people out there.
Yeah, no, I know, man. I know, but if you put together
Tucker, you gotta be careful with what you say, bro. We're here.
I know you don't like it, Wabi.
It's gonna age like spoiled milk, man.
I don't know. Look at what he's got here, man. Look
at that nice regression curve. That's beautiful.
Ethereum is gonna come home.
Guys,
look, that's my view. I think Ethereum needs to come home. The question I think you have to ask yourself is, does ETH go home or does home come to ETH, right? Because the longer we just go sideways, where home goes up, you know?
Guys, look, if Ethereum makes a new low, guys, I will
true. That's very true.
I will shave my entire face. The beard is gone if ETH makes a new low. It's here recorded with Ben Cowen. Ben's a witness, right? I'll shave my face if ETH makes a new low, guys.
For the record, I think there's a good chance ETH makes a new low.
Yes, Ben. My man. Go. There we go.
0.04. 0.04 is coming.
I mean, I obviously don't know for sure, but yeah, have you guys seen the NASDAQ comparison to ETH? I think you probably have seen it before.
Are you talking about the .com?
They're relatively tightly correlated. Is that what you're talking about?
Well, I mean, yeah. So not the actual. Forget about the trend for a second, right? But just look at like if you remember where the NASDAQ peaked out in 2000, it peaked out at 4,800. Where did ETH peak out? At 4,800.
Oh.
Where do you think the NASDAQ bottomed?
So it's like a
baby.
The bottom
going down
795.
But see, that shouldn't even be upsetting for a lot of people. If you're very bullish on the Ethereum ecosystem, look what preceded that bottom right there. You know,
yeah.
Just zoom
out.
out.
Here's the thing. Like, I mean, 795 on ETH puts it. it puts it right back home, right? I mean, right back in this region. Now, the bullish case, though, is, I mean, if it does go to that level, look what came next for the NASDAQ. I mean, it then went to 16K, you know? So, I mean, that's probably, but I don't think we get to that. I don't think we get to that valuation for several more years. And I don't think that comes until we get back to favorable monetary policy. But yeah, I think this is the risk, right? If we start a downtrend, kind of like we did in the second half of 2019, then yeah, like you could see a new low materials. I don't really think that it necessarily makes sense for you to wait to a new low to get any ETH, right? But what I would like to see is I'd like to see the Ether Bitcoin valuation at around 0.03 to 0.04. Okay, that's what I'm looking for, and I'll tell you why. If you look at there's two ways of looking at the Ethereum Bitcoin valuation. There's sort of the glass half full approach and the glass half empty approach. So I guess it depends on if you're a Bitcoin maxi or if you're an ETH maxi. But the way to look at it, there's two ways. So the more optimistic way is to say that Ethereum is sort of gaining on Bitcoin over the macro scale and that it's following its own logarithmic regression trend, something like this. And I still think that whether you believe ETH flips Bitcoin or not, like 5 years from now, I still think it needs to come back down to these levels, and spend a little bit of time there before getting enough fuel to go higher. I mean, look, Ethereum has been in this range for 2 years and it hasn't broken out. So I think that perhaps what that might be telling us is that it needs to come back down here, gain some fuel, and then try again, right? And then maybe it'll have better luck next time. The other view, the more pessimistic view, which I don't even know that I align myself with a more pessimistic view. I'd say I'm somewhere in between. I don't really think ETH is going to flip Bitcoin, but I also don't really think it needs to go back down to 0.01 to 0.02, if that makes sense. But the other way to potentially visualize this is to say, well, what if this is an oscillator and it's just sort of between these ranges? Now it's not that clean when you look at this chart, but look at the ETH market cap divided by the Bitcoin market cap chart. It looks kind of like an oscillator, and I mean, it only goes back to 2017 here, but if you can imagine it going back to 2015, it would have come back down here. And I think that there's a real risk here that it at least retraces half of this channel, which would mean, another 30 to 40% drop on the Ether Bitcoin pair, and a 30 to 40% drop from the current valuation gets you to that 0.03 to 0.04 level. So that's what I'm looking for the Ethereum Bitcoin valuation. Is I'm looking for around that 0.03 to 0.04 level. Once it gets there, then maybe it starts to finally become worth the risk against Bitcoin. And again, to the people that argue against that and say, because the biggest argument against that, of course, is the merge, right? The tokenomics, the changing model. I would say, well, you know what? I mean, you changed the model here, and it's just been lower highs ever since, right? So, to some degree, I feel like the market has spoken and said, yeah, like that's great, but it's still lower highs and lower lows ever since the merge. So my view is that we likely see it break down, but then sometime, late 2024 or 2025, we'll see it break back up.
Powell just increased rates by 25 basis points, and I'm not sure how Bitcoin reacted at the current moment.
Seeing the S&P jump a little bit.
Bitcoin,
that's what Powell does, man. He wakes up and he raises rates. That's just what he does.
Bitcoin hasn't moved. I saw a funny tweet earlier. Someone was like, 5 hours until nothing happens. Like basically, like we're all waiting for this rate hike, and then maybe nothing actually happens.
We were talking about this earlier on our Twitter space about an hour and a half ago, where the volatility before and then preceding the most recent FOMC meetings has been dramatically more muted than it was this time last year. The market, it's not as reactive as it was prior. So unless we get some sort of piece of data or some language that could be classified as a statistical outlier, there's really no reason for the market to do the famous whipsaw or double whipsaw. The market's been pricing in 25 basis points for weeks now. So
Yeah, I think it's kind of interesting because last cycle, Bitcoin bottomed when we hit the terminal rate, right? That was when Bitcoin bottomed, when we hit the terminal rate. And then it topped once the Fed started to cut. And then it bottomed once the Fed had their last cut, right? So like there's definitely some changes in behavior once the Fed reached the terminal rate, started cutting, and then hit their final cut, right? That there was like something happened at each of those time frames. And there's kind of a similarity today, except the Fed has been so far behind the curve. Like they should have started hiking, probably 12 months before they actually started hiking, right? They just started hiking way so late. But this time, the Bitcoin low here sort of corresponds to when the Fed shifted from 75 basis point rate hikes to 50, right? So from 75 to 50. And I've been curious if whenever they reach the terminal rate, which this could be the terminal rate, I mean, it could be, then maybe that would mark the high, like the high on Bitcoin, right? Like around the terminal rate. Like you can see here, they're now at 5.5%. I mean, yes, like when you think about it in recent memory, like we know the Bitcoin high, at least recently, came a couple of weeks ago. But if you look at this in the future, you're just going to say, okay, well, yeah, the high potentially came around terminal rate. If this ends up being the terminal rate, if it doesn't end up being the terminal rate, then I guess you can throw that theory out the window. Or maybe it just means the Bitcoin climbs the wall of worry itself. But I do wonder if we're just sort of one step behind. So I think the thing to look out for is if Bitcoin does top out here at the terminal rate, then perhaps Bitcoin bottoms on the first rate cut.
That's a really interesting observation there. I mean, I know we only have one data point, or I don't know, maybe there's a second one, but still, I haven't seen anybody else look at that.
That's the only data point we have. Yeah, I mean, you can see like rates were basically zero, so there's not really a whole lot of stuff to look at. So yeah, you can't really extrapolate it at all. But it is interesting that, I mean, certainly last cycle, you can see that Bitcoin bottomed on the last rate hike, right? And then it topped when the Fed started cutting. So I guess the question is I guess the more bullish perspective would be to say that, well, what if Bitcoin climbs the wall of worry until the Fed cuts? But I don't know. I mean, there is still some seasonality with Bitcoin to suggest that in the pre-halving year, it tends to roll over sometime halfway through the year.
Yeah, Ben, I've got a few charts I wanted to run by you. I don't know, and you can keep screen sharing. I think you can just switch it over, but it looks like TLT is bottomed. If only looking at this tweet right here. So I don't know your thoughts on that, but no, besides
I don't know. I can't argue against that.
I don't know, man. It's looking pretty bullish here, but no, I just wanted to run a few things by you, and this pretty much lines up with what you've been saying, but this is just Bitcoin, the halvings and kind of the corrections in the pre-halving year. And what I could figure out was that, and this first one's a little screwy, but we get about a 40 to 50% correction, regardless of black swans, about 250 to 300 days before the halving.
Right.
I guess that's when we put in our top, right? So these are all measured from the top of the quote unquote bear market rally before the halving. So if we consider our top to be in, right, that would give us like 18K, 19K. Now, I wonder whether or not we get a correction now or later in Q4, because if we could push up to something like 35K, right, I think we could make, and I put this at about 40, then we kind of get our series of higher lows here, potentially. Either way, it'd be a higher macro low, but it's been my base case just looking at this that, people have been saying like, the lows are in, accumulation's over, we're going up only. And I can't get on board between this and then this is the other few metrics I was looking at, because a lot of people were comparing it to at least when looking at the dollar, right? So here we've got Bitcoin, we've got the dollar. You know, people were drawing. I've just seen other analysis like, okay, dollar down, Bitcoin straight up, right? And now we're kind of getting dollar down, you know, expecting Bitcoin straight up. But what people fail to understand is that net liquidity and M2 money supply was simply not doing the same thing that it is now back here, right? It was going straight up in a straight line as far as liquidity, and money supply was also going straight up in a straight line. So I just I just personally can't get on board with necessarily determining, you know, the lows are in and alts are bottomed, and you know, get on that train. But the only question is like, if we're trying to figure out where to potentially buy alts at extreme discounts, we have to figure out first, like, has the high for the year been set? And if so, where would that put us? And that kind of just refers back to this chart. And we were talking with some other people a few weeks ago, and I've just heard sentiment across the board, like, you know, sub 25K isn't going to happen. And I've just had questions from buddies also, like, hey, like, should I pack my bull run bags? Like, are we going? I'm like, no. Like, I think you should be allocated, but I don't think it's time to put everything on a ledger and put it in a safe and, you know, walk away. So yeah, that's kind of my base case. Looking at somewhere in Q4 for kind of across the board a correction, equities and crypto. I was looking at something interesting. We're playing around with this on our show Market Check the other day, looking at potentially a deviation of the highs, like from 2001 to 2007, but kind of smashed into like 2 years. So I just pulled the bars tool out and put the fractal on. Basically, what it would imply is, you know, 5,000, basically 4,950, and then new lows of like 3,200. And I mean, this I'd have to say is probably the most predatory price action that we could possibly see. But yeah, but the S&P does this all the time. I mean, it does the kind of the megaphone pattern even back to like the 1970s. Like, I know you've gone over that stuff before, but yeah, I'm just because I was a bear in Q1 on the stock market. Like, I was not expecting, you know, I was not expecting that. You know, I was expecting maybe, especially right here, like this. I thought, okay, we're coming down, like it's over, and then we just shot out of it. So, yeah, pretty much looking at Q4. But what do you think of all that?
As far as the S&P going into this year, I thought the highest it would go would be 4,300. Like I wasn't like I thought it could achieve 4,300, and now it's blown past that, you know, I mean, about halfway through the year. So you know, once we passed 4,300, my view sort of was just like, well, it's probably just gonna rally until the labor market finally budgets, you know. And who knows how long that's going to be. I mean, there's probably going to be some corrections. We even talked about corrections earlier, but it's funny because I mean, in terms of that 35K level for Bitcoin, that was actually so going into this year, that was also sort of my view as like a potential high for Bitcoin would be about 35K. And the reason I can you see my screen here?
Yeah, here I'm gonna switch it over to you.
Yeah, so basically I just said, hey, I think there's a chance we could go to 35K this year if we follow the average of 2015 and 2019. Like if we reach that 2.1x off the yearly open, that would correspond to 35K, and hasn't happened yet, you know. So if it does happen, I think it needs to happen really soon. You know, I mean, like you can see the seasonality here for Bitcoin. There has been another risk-on environment even in sort of that early phase of August. And perhaps with this ETF, with the spot ETF potentially being approved, maybe Bitcoin can muster up the courage to put in another higher high. But I would say if it's gonna go higher, it's running out of time to do so. It's kind of my view. Like I think it needs to do it like now if it's gonna go higher. And as going into July, I mean, I was sort of the opinion that it needs to happen this month. I mean, I feel like if it's now that we're at the end of July and it still hasn't done it, I'm starting to lean in the direction that it won't go to 35K. But I will say this, like the one thing that we have seen by Bitcoin is that if it does go up quickly, that actually wrecks the altcoin market, right? They just bleed on their Bitcoin pairs. So that would almost be more detrimental for the altcoin market if Bitcoin were to keep going up, because there's just not a bid for altcoins in the same way that there has been for Bitcoin. So yeah, I mean, like, I think 35K, it's possible we hit that level, but still think it likely fades into the end of the year. As far as TLT, which you briefly talked about, so history would show that like buying bonds, the closest you can get to a Fed pivot, I think, is ideal. So whether this is low or not is hard to say, but it's as close as you can get to a Fed pivot, and who knows when that's going to be. I mean, the Fed certainly says it's going to be next year, but the Fed often does things different than what they say. So yeah, I mean, like I think long term, TLT around 100 is not necessarily a bad area, but I think the sort of the counterpoint is, well, with inflation still potentially sticky, we're seeing oil go back up right now, and some of the headwinds for CPI might now actually become tailwinds. But the other thing, just from like a technical perspective, if you look at the 10-year, remember, as the long end of the yield curve goes up, TLT goes down. So we have to go think, well, what's going to happen to the 10-year, right? What's going to happen to the 30-year? And if you look at, say, like the 10-year, there is, if you look at it on more of like a technical basis, right? Like there has been a breakout of the 10-year sort of above this level, and then now it just back tested it, and now it's starting to go back up. So if the 10-year goes up because inflation starts to come back, right? Like let's imagine inflation is stickier than is currently being priced in. Then it could make the long of the yield curve go even higher, because people might just start to throw in the towel and say, well, the Fed's not going to pivot, even if risk assets do get hit. Now there's no reason to think they're going to pivot at all anytime soon, as long as the stock market is still going up. I mean, I know people's altcoins are going down, but the Powell does not care about your altcoins, right? He does care if the S&P, if the S&P goes back down to say like 3,500 or 3,400, he would care at that point. But he doesn't care if the altcoin market's getting hit. So yeah, I mean, I think TLT around these levels is probably going to be a pretty good area when you look back on it, maybe in like 12 to 18 months. But if the 10-year here and the 30-year too, I mean, if these keep climbing higher, then it would send TLT lower. And I think the reason to at least pay some attention to it is if you look at like something like oil, right? Like oil's been getting a pretty sizable rally here. It could just end up being a lower high, but the reason to pay attention is because this high here came in June. And now, we're more than a year out. So as this goes up, we're no longer really comparing it to these highs over here. We're going to start comparing it to some of these levels. And therefore, it used to be sort of a big drag on CPI, bringing CPI down. It might enter into the phase where it's no longer nearly as big of a drag on the CPI. And then you could see the CPI even temporarily go back up to the upside. And that would, I'm sure, make market participants really frustrated if core CPI were to start to go back up.
Yeah, I was going to quickly ask, like, are you more concerned about, and then we'll go to you, Will's outlook. Are you more concerned about reacceleration of inflation or possible deflation? Because from where I sit, it seems like, a lot of these rate hikes have potentially not worked their way through the system yet, and we've already seen a good amount of disinflation. So I worry we might overshoot to the downside, but I just wanted to see what you were thinking.
Yeah, I think it's more likely we see disinflation than hyperinflation. I think if we do get the reacceleration of inflation, I think it would be very short-lived, is my view. If inflation goes back up, I think that it would just be for a few months, and then it would just start going back down again. I think Powell is on a mission. And he does not want to become, Arthur Burns, right? He does not want to be remembered as the guy who could not conquer tame inflation. Just look at the 70s, how brutal it was. It was just a series of higher highs and lower lows for 15 years in the stock market. And I don't think any of us want to live through that environment. And I don't really think Powell wants to either. I think he'd prefer to just, hey, he was embarrassed to some degree. I mean, I think the whole Fed was embarrassed because they delayed hiking for so long because they thought inflation was transitory. And so now I think they would, and he's even said as much, right? He's even said that they would rather run the risk of overdoing it and then being able to cut and, become more accommodative than not do enough, right? So he said that many, many times. So I think he will achieve what he's searching for. I don't know how long it's going to take, but I think he's going to keep hiking and keep on going with QT until he sees inflation back at the target. So yeah, I mean, in the short term, I don't know. We could see inflation stay somewhat sticky, but I would expect it should continue down as we get further into the year and early next year is my guess. And the thing is in the 70s, after the first peak, I think this is what you have to be careful with. After the first peak in the 70s, it was actually headline CPI bottomed out in July, like at 3%, right? Like, which is where it is today, or 3 to 4%, which is where it is today in July. And so that's, I think, the biggest risk right now is if inflation starts to go back up, like Powell, I think his resolve is going to be tested, especially if the labor market loosens up. Like if we go to 4 to 5% unemployment, but inflation is going up, is he going to stick with it? I mean, he said he would. But we'll see. I think he will. I think he'll stick with it until as he says the job is done.
Ben, I wanted to know your thoughts. I'm not a bear, truthfully, but I do want to entertain this. Ben, what would be a scenario that would cause Bitcoin to go back to retest the lows of 15, 16K? If you're a bear, what are some things that you would want to see happen?
I mean, I think a recession would probably take it there. I mean, by the way, you don't have to have new lows on Bitcoin for altcoins to see new lows, right? Like, so we should make sure that's clear to people. Like you could have one of you is drawing out a scenario earlier where Bitcoin corrects like 40% down to like 18K or something. And it's just like a higher macro bottom, just like last cycle was, right? Like there's a chance that happens. But even in that scenario, altcoins could put in new lows. So I guess the issue would be, either a recession or a recession scare, right? Like even in 2015, 2016, there was a scare of a recession and the S&P did see a sizable correction and it kind of stalled out for a while. So I guess that would be a scenario. I guess other scenarios could be other major companies going under. If there's any sort of nefarious business deals that because again, like, Celsius collapsing, Luna collapsing, all this stuff that FTX, they're not black swans, right? It's just an artifact of tighter monetary policy, and they expose the zombie companies. It's just that the companies that have more capital, it just takes longer to expose them, right? So Celsius was the weakest link, and it got exposed first, right? FTX had more capital to work with. It took longer to expose it. Who knows if there's another one sitting out there that is just sort of waiting to be exposed? I don't know. I will say, like my goal, I mean, the only thing I have bought in crypto in 18 months is Bitcoin. It's the only thing I bought. I just had some limit orders filled at some of the risk levels in late 2022, and I haven't sold any of it. Like, I mean, people say, well, why not? Why don't you sell it? If you think there's a good chance we fade the second half of the year, why don't you sell all your Bitcoin? Because I think that it's probably going to fade. But what if it doesn't? Like what if it goes up? And also, like, I have plenty of cash, to sort of buy if it goes back down. Like, I'm not worried if I would actually prefer it to correct. But here's the thing, like, even if Bitcoin USD corrects, if you want to get into the altcoin market, you can convert your Bitcoin to altcoins during a potential capitulation scenario. And then that's where the altcoin market can outperform Bitcoin. Because everyone looks at, when we look back at the altcoin chart, say like 3 years from now, everyone's just going to compare it to where they bottomed out. They're not going to compare it to the whole downtrend beforehand, right? They're just going to say, well, from the low, this is how much your altcoin has outperformed Bitcoin. So yeah, like there's a scenario there. So I'd say the main risk would be a recession. We do, of course, have an inverted yield curve. By the way, I think a lot of people sort of think that inverted yield curve means recession now. Historically, it does not mean recession now. It means recession in like 12 to 18 months from when it inverts. And now we're just now entering into the window where a recession would normally occur after an inverted yield curve. Either the 3-month and the 10-year inverted in October, the 10-year and the 2-year inverted back in the summer of 2022. So we're basically a year out from that. And oftentimes a lot of these macro metrics like non-farm payroll and whatnot, they don't even start to roll over until 12 to 18 months from yield curve inversion. So I think if you want to see lower prices, you're probably sort of banking on a recession sometime. It's kind of funny because we had a recession last cycle too, right? It was just short. It was in 2020. We also had an inverted yield curve in the pre-halving year, right? It's like the same thing, right? It's like we have an inverted yield curve in this pre-halving year. Perhaps we'll get a recession in early 2024. And then that'll make people, here's the thing though, if we do get a recession in early 2024, it might make people think that you have to sell your alts, right? They might finally capitulate all their altcoins. It's like, all right, well, the recession is here. You know, the doomers were right. Now I got to sell my altcoins. But I would argue that altcoins might actually bottom out at the very beginning part of a recession. Just because they're so much further up the risk curve and they get hit so much worse than equities. I would expect altcoins to probably bottom before equities. Even last cycle, we saw a lot of altcoins bottom out before equities. So I would expect us to see that something like that again. So I would be looking to buy the altcoins in a scenario if a recession becomes obvious. You know, once the recession is obvious, it's too late. You know, to sell. I mean, it's too late. But I think that's what you're looking for, right? It's either a recession or a recession scare, something like that would likely lead Bitcoin to a potential secondary scare. Like and by the way, the halving, it's funny because we always talk about the halving about a year out, and then sometime between now and the halving, we always joke about how the halving meant the price of Bitcoin halving, right? Before the actual halving is what normally happens.
Ben, and would you say that last year was the recession, given that we had 2 back-to-back quarters of negative GDP reportings? Or are you looking for, the next quote-unquote recession to fall in line with higher employment numbers and things of that nature? Because last year, I think people kind of forget that not only did we have 2 back-to-back quarters of GDP, but gas prices were so high in the United States that in some of these more larger cities, people couldn't even afford to put gas in their car.
Can you see my screen?
Yeah, I could see it.
So yeah, so like I'm not of the opinion that Q1, Q2 was a recession. From the definition of 2 consecutive quarters of negative GDP, then by that definition, of course, it would be a technical recession. But normally when we think of recession, we think of people getting laid off and the unemployment rate skyrocketing, right? And like if you look at this chart, and I assume the audience can see the screen here. If you look at this chart, it shows the unemployment rate, it shows the S&P, and then the gray shaded regions are recessions, right? Like it's really hard to make the case that this area right here is a recession when the unemployment rate was basically at 50-year lows, right? So I don't really see the case for saying, hey guys, like in 10 years, people are not going to look back and say, all right, guys, this was a recession right there, Like I don't see the case for that. I think you actually have to see it accompany the labor market going up. It's just that normally when you get 2 consecutive quarters of negative GDP, like you were mentioning, right? So like this is real GDP. We can say we got 2 consecutive quarters of negative GDP. It's just that normally when you get that, it corresponds to the labor market softening up, right? It's just that this time it didn't. But perhaps one of the reasons it didn't was because there was just an explosion in GDP after, because of all the printing after the pandemic. And there's some other indicators you can look at as well, right? Like one of the reasons I think the labor market hasn't loosened up is just because there's so many job openings, right? I mean, like we're still arguably not even below this trend line here. There's several other, you know, indicators we can look at. There's also gross domestic income, like there's inflation adjusted gross domestic income, and this one is starting to look more recessionary here. You can see that when it goes negative, it does tend to correspond to recessions. Another one that I think a lot of economists prefer is to actually average out GDP and GDI and to look at that. And if you look at inflation adjusted year-over-year change, it still is not negative. It's close, but it's not quite there. Quarter over quarter, we've actually had several negative prints. Three of them, or three or four, maybe three. This one was almost negative, but not quite. But there's a couple others that I think are actually interesting to look at. And that is we actually just got an update on this data point today, the Coincident Economic Activity Index. Look at the year-over-year percentage change, and you can see kind of where recessions occur as this really starts to dive into negative territory. And this just shows you how much excess there's been, right? Like we've been trending down. I mean, April 2022, the year-over-year difference was like 6.5%. It's been trending down ever since then. Now it's at 3.5%, right? So it's going in the direction that I think the Fed wants, but it's just, I mean, it's hard to slow down the economy, right? When you print $6 trillion, you can't just snap your fingers and say that it's over, right? So this is still this still hasn't really hit those lower levels normally from where you would see that. And here, there's another one, right? There's the composite leading indicator. Look at this one. Like it's been trending down, but a lot of the prior recessions were lower than where it is right now, right? And the rate of change on this, like if you look at like say like the month over month percentage change, it was becoming less negative, and now it's just sort of sitting at that negative 0.05% level. So that, I mean, the Fed is making progress in slowing down the economy, but I feel like a lot of what they've accomplished over the last year is just removing a lot of the excess. They haven't actually gotten to the point where they've really tightened up tightened up conditions.
One I can't remember who I was talking to that said this, but the way that they're viewing basically what's happened for the past 2 years was that they printed so much money. It's like, imagine the government gave you $10 and they said, okay, now we're going to take back 5. Well, you've still got a net gain of 5. And I think people have consistently underestimated simply how much liquidity is still out there, even with the tightening cycle that we've gone through. But Ben, we do have another one of our teammates, Will, who is able to join us here for the end of this. So I want to give him the opportunity to speak with you and maybe ask some questions. So Will, he goes by Will's Outlook on Twitter. How are you, man? What's going on?
Hey, how's it going? Yeah, thanks for coming in, Ben. Really appreciate it. I did have some things I wanted to run by you. Very similar price targets I had at the same time. I was looking for roughly 35K. And for me, it was more of like a swipe at liquidity than it was a sustainable pump, right? And I think that would be the intention of that move. But if I could just share real quick, if that's okay. So this is kind of like my Bitcoin overall move, and I was just basically looking for them to come up and kind of hit this high up here and then kind of capitulate back down. Now, the depth of down, I don't really know where that would land. I was just kind of laying out levels, obviously 25K being an easy level to grab, 19K wicked being an easy level to grab, as far as like areas to DCA down if price were to continue to the downside. Now, of course, this could always be violated. But on top of that, I was also looking at a channel move here, kind of like a drop into liquidity, a pump into the high. And then once that pump into the high occurred, you then kind of gradually move back down, reject, maybe hit the middle, roll out. Now, this is a little more TA based, but that's kind of where I came up with this whole thesis here on Bitcoin. And I would arguably say, too, if we look at vol here, vol's been kind of gradually climbing, and I think it's pretty much topped, right? And we could see that right in here where vol pretty much topped out on this candle. So a grab of liquidity here would just be vol sideways, in my opinion, and then a trend back down to get vol more active, right? And vol is just more of a measure of buyers and sellers interacting with the market. Overall, like this was kind of my thesis on Bitcoin. I liked your take specifically on one thing, and that was that Bitcoin doesn't have to bleed necessarily if alts bleed, right? And I was also looking for a similar move, which would be if Bitcoin pumped here, that liquidity would more likely be taken from altcoins and pumped into Bitcoin to raise Bitcoin's price, depleting the altcoin market and dropping the altcoin market as a whole. One other thing I wanted to kind of run across to you outside of that, because I just wanted to kind of touch base on that, was, kind of the historic value of SPY, right? And I think a lot of people don't really evaluate this a lot and look at it, but SPY as a whole on bigger time frames, over and over and over again, even obviously back here to the 70s, right? Arguably has formed lower lows when it starts to get these bottoms, right? These capitulation bottoms. And SPY arguably can even form higher highs, but it then becomes a broadening wedge that forms a lower low, higher high, lower low, and it more or less is just a trend sideways. And it basically did the same thing over here, just on a much longer time period from 2000 to 2008, right? A lot of people think these were two separate markets, but in reality, they were two markets that reacted to each other, I think, based on price. And it basically resulted in a double top move here, where you basically came down, hit the low. This is the same low you hit here on angle. And then you hit the high right here, deviated just a little bit above it, and then rolled back down to a lower low. We did the same thing over here in 14 all the way into 15. And then we did the same thing over here, arguably with the COVID lows. And again, this is another broadening, right? Where you came up, hit, came back, hit, came back. And then now we're kind of up here, right? And we've already fallen over for our first dip. And arguably, I would say we're looking at two scenarios potentially here. And you can give me your take on this too, where it's either going to become a broadening wedge, which is where price is going to exceed and then exceed to the downside, right? And that's basically what a broadening does. It's extremes to both directions, which would be an exceed to the downside, or it's going to be a double top market potentially to a lower low, and I think these targets get hit. A lot of bears targets were in these areas, and price just did not come down there and capitulate. And I think it just happens much later. And you normally see this on the latter end of the risk curve. So basically, you have the inversion of the 10 and the 2, right? That's a good indicator, I think. And when you look at the 10 and the 2, I think I have the chart up somewhere here. The 10 and the 2 tell like a whole story based on overall price. This is actually mortgages. Hold on just a second. Sorry. That's VIX. Okay, here we go. So the 10 and the 2 tend to tell a different story. And this is, so basically this is rate hikes and this is rate cuts. And from what I've seen historically on the 10 and the 2, and this is really interesting, is that you tend to have your hikes into your drop, your cuts into your up, and your cuts tend to be very bad for markets, right? And then you kind of sustain price right up here. And then a year out from there, you drop again, right? And you form those lower lows. And it's done it time and time and time again. If you look here, this is 99 going into 2000, our drop, right? And then you come over here to basically 01, and your market really gets wrecked over here. And then you had the same thing over here. This is our 06, 07, right? And really 07 wasn't horrible, I would say. It started to get bad in 07, and then where you really kind of got hit was over here in 08, 09, right? As you've uninverted. You did take significant hits on the basically rate cut side, right? This is your rate cut side. This is your rate hike side. And then from here, you basically got destroyed. So right now we're still kind of playing in these lower ranges. And this is why I'm playing long right now, at least in the market, is because we're playing in these lower ranges. As long as we stay in these ranges, the market can play to the upside from my perspective. But the minute we start cutting, I think markets start to get hit really bad, and then you really get crushed up here on that first year, right? So very interesting thing that I've kind of evaluated to the market, and it seems to be a repetitive thing with like a 100 out of 100 batting average, right? There's never been a scenario where this hasn't occurred. So I think the uninversion is something that should be very, very much paid attention to, and really this uninversion is arguably worse than 2000. Worse than 08, and we'll see where it goes at the end of the day, but this is just the way I'm viewing the market right now.
Yeah, maybe a couple of thoughts on the, like, I think you're right. So like volatility has been going down for Bitcoin. But I don't know if using the Binance chart is the best, because I think they had some type of like trading like fee, like where they were doing away with the fees for a certain period of time, and it encouraged more people to trade, and then they got rid of that right when sort of it spiked up. I think that might have been like maybe the last week of that or something. But I mean, volatility has been still going down. But maybe like another exchange, or looking at a few different exchanges might be useful. As far as like the inversion of the yield curve, like I think you're right. Like normally it's the uninversion that is a problematic part. But I also think one issue is that the rate cuts don't cause the market to fall, right? It's not like we look at the rate cuts and say, oh, well, that means the market has to fall. What normally happens is the market starts falling, and because the market is falling, then the Fed cuts. But because they had hiked for so long, and like it's like right now, like you don't get the effects of the rate hikes immediately, right? And you're probably not going to get the effects of the rate cuts immediately. So yes, like the market can continue to drop after the Fed cuts, but normally the market has already dropped a decent amount going into that first rate cut, if that makes sense. It's just that, a lot of people, after they're already down 10 to 20%, they don't want to then trade, they don't want to sell it, so they just hold it, and then the market tends to just keep going down into the rate cuts. But you're right. I mean, normally I mean, that's even where recessions typically occur, right? Upon the uninversion of the yield curve, not during the actual inversion of it. So yeah, I mean, I think that as long as, I mean, I think your thesis is generally correct, right? And the thing I would look for is just look for any weakness in the labor market, right? Some people I've heard they basically just stay long until they see the labor market show any weakness. Then from that point, they get out.
Hey, Will, if you're speaking, I can't hear you.
Oh, my bad. Yeah.
Okay,
I didn't particularly articulate that, but yeah, the cuts tend to occur because of something happening, right? The thing that I think will happen, at least my thesis of what I think will happen, is I think deflation will occur, and to a degree that puts us below the 2% target. The Fed will then step in to try and liquidate the market, or will add liquidity to the market to bring inflation back to a reasonable amount, right? By doing two things, basically cutting rates, and in addition, probably stimulating the market in some ways. And I think that stimulation will later on occur in a reoccurrence of inflation, maybe multi-years down the road, 2 or 3 years down the road, 4 years down the road. I think this is kind of the route we've taken. And I think it's because we hit the extreme on inflation. They hit that 9%, and they knew they needed to step in and do something, but chose not to. More on the factor that, I don't really know their intentions. I don't want to assume their intentions, but I definitely know that they came in way too late. And then they tried to hike really fast, right? And that hiking I guess in real time, on a bigger time frame, in my perspective, the way I'm viewing it is that basically that will kind of weed its way into the market. And kind of like to what you said earlier too, is that, money is basically there's a lot of liquidity, right? There was a lot of liquidity added and stuff like that. And so it takes a lot to weed that out. But I think once that liquidity kind of gets to an equal point, that weed out will probably end up way worse than what people think, right? And they'll end up kind of sucking up liquidity much faster than what they think, because they'll break a certain support, and then things will just kind of escalate as far as liquidity leaving the system, through the deflationary scenario, right? Or it'll become overly saturated, right? Assets will have blown up to a point to where they've got multi-year gains in a matter of a year, and people will start taking money off the table, and the market will start reacting to that, and it'll be kind of a cascade of a race to the bottom, more or less. So there's a couple different scenarios I've kind of entertained there, and I don't want to be too late to the party, but I don't want to be too soon to the party. I was a bear at the beginning of the year, but I was able to switch on that based on liquidity and play the moves to the upside. But at the same time, I think there's a lot of inherent risk that people really need to pay attention to, even if you're a bull or a bear, on both sides. I think deflation is really the biggest risk at this point. And then we move into possibly, after the deflationary period, probably even moving to, there's even potential we move into like lower 1%, right, on inflation or less. And that decentralizes investing, because you're investing to, you know, beat inflation. If there's no inflation, there's nothing to beat. So in that same factor, we could see assets sell off in a deflationary environment. And then, you know, basically the Fed come in to stimulate, and then we end up with a 2008, 2009 scenario again, you know, years down the road.
Yeah, I mean, if you look at, let me just share my screen one more time here. If you look at yield curve, or sorry, what am I looking at? If you look at the ROI by the S&P to the low after yield curve inversion, say look at like the 2-year and the 2-year and the 10-year, and you just look at this cycle. I mean, like, people say that like this is unprecedented, like, right, like this rally is unprecedented in inverted yield curve. It's not. I mean, like, look what happened during the financial crisis. Like, we climbed the wall of worry for a long time before the market eventually rolled over. So yeah, I mean, I think at the end of all this, there's going to be a reckoning for sure. It's just a matter of when, I think, more than anything else, right? It's a matter of when does the yield curve become uninverted? When do those cuts come? And I mean, it could still be some time before all that happens. I mean, I would expect some form of a correction with the S&P, probably relatively soon, because it is kind of that seasonality point of time to sort of see that correction. But yeah, I mean, I think that the sort of the real reckoning could be a ways off. The other view, though, in terms of these phases, is think about like prior inflationary bear markets. And there's actually several inflationary bear markets that were not, you know, like they did technically go lower, like eventually, but it wasn't like that much lower, right? Like, so like here's the current one, assuming if it's not over. But if you look at like the one from 1946 to 1949, right? Like we had a sizable rally here, and then we like put in like just like a slightly lower low before ultimately breaking back up. There's other examples of that as well, I think, like, but there's some that are worse, right? Like there's like the 73 to 74. I think you could argue that was more of like a hard landing, right? Rather than a soft landing. 1946, high inflation coming out of World War II, was a soft landing rather than a hard landing. So I think that, you know, if the S&P does go back down and put in a new low eventually, then it might not even be that much further down from the prior low. Like it could be 3,400, right? It could be the pre-pandemic high.
That's my target too. That's exactly my target.
Yeah, I mean that's and if Bitcoin goes to its pre-pandemic high, right? That's like what, like 12, like 14, 13K, something like that, 12 to 14K. I don't know exactly. I mean, I know Bitcoin hit 14K in 2019, but I think it was at what, like 12K right before the pandemic sort of hit. The altcoin market looks a lot more bleak if it has to go back to its 2019 high, because its 2019 high is of course much further down. But yeah, I mean, I think a lot of what you said certainly makes sense. And as far as the S&P, whether it puts in a new high or not, it's kind of a toss-up. Like during yield curve inversions, like half the time we put in new highs, and then half the time we don't. So yes, there's certainly a chance that the S&P could certainly go put in new highs. There's also a chance that it doesn't, and it just ends up being a dead cat bounce that's, you know, that retraces a majority of the move, but not the entirety of the move, before it rolls back over. Again, sometimes we make it to new highs after yield curve inversion, and then sometimes we don't. The dot-com crash, we didn't. The financial crisis, we did. It's a coin flip whether the S&P hits new highs. And I think that ultimately what determines if it hits new highs is, again, like, how long does the labor market hold before it goes? Because once it goes, then all bets are off. Like, you know, like if we start printing 4 to 5% unemployment, then I think you probably just sort of throw in the towel on new highs if they have not already occurred, right? Like now, they could occur because the unemployment rate hasn't really moved yet. But if it's the end of the year and we're still not looking at new highs in the S&P and the unemployment rate's really starting to roll higher, then it's probably not happening.
Yeah, I try to never have things in definitive yes or no's. Like I definitely, I'm in the camp that it could be a lower high, it could be a double top, it could be a higher high. It just, once you start reaching those upper ranges, right, whether it be a lower high, higher, or equal high, you need to be more cautious about your trading.
Yeah, for sure. I mean, I think just being sort of protect the way that I'm navigating these markets, just for the record, right, is, I mean, I do have a sizable cash position because, I don't know about you guys, but I've never been able to go get like 5% risk-free yield in a CD.
It's awesome. It's absolutely awesome.
Yeah. I mean, so I'm doing that. I have Bitcoin. That's the only cryptocurrency. I mean, I have like 1 to 2% of my portfolio is in altcoins, but it's mostly they're just in like staking pools, right, that I've had for years. Like 99% of my crypto portfolio is just Bitcoin. And the reason is because, hey, if Bitcoin joins in on the party and it wants to go up, I want that exposure. But if it doesn't and it goes down, well, guess what? It's still going to outperform altcoins. So I feel like Bitcoin is sort of in that interesting position where it gives you the exposure to crypto in case it goes up, but it also tempers your downside. It mitigates the downside risk, right? Like if Bitcoin drops 30% or 40%, or let's say it halves before the halving, right, which is what it usually does. I mean, it would suck for it to go 50% down, but it's better than going like 70 or 80% down, which is what could happen to some altcoins. Like if Bitcoin goes 50% down, you could definitely have altcoins drop in another like 60, 70%, because they tend to get harder than Bitcoin when Bitcoin drops. So, and then, yeah, I mean, the way I navigate the equity market is actually quite boring. It's just low expense ratio index funds is all I really buy, and I buy them below a certain risk level, and I forget about them. There's actually a lot of research that shows that the higher the expense ratio, the worse the worse of a performer that fund is. And the reason is not necessarily because the fund, I'm kind of going on a tangent here, but it's not because the manager of that fund is never skilled. It's just that if they are skilled, usually the extra basis points that they're charging you takes away whatever improvements they were getting from the market, right? It's like, so if they are a skilled hedge fund manager and they're outperforming the market, or just fund manager, I should say, like if they have a fund and they're outperforming the market, well, you might say, oh, well, it's doing great, but they're charging you enough that you would have been better off just investing in something that had a 0.0% expense ratio or something low. And also, there's a lot of research that shows that passive management is a lot better than active management, right? Like just a passive fund is better than active, because as humans, we are very bad at timing the market, like very, very bad at timing the market.
Yeah, and I think a lot of the time too, like a lot of people take like conversations like this as if we're trying to tell people to time the market or look for entries at this point or that point. And really the reality is like it's more about, where you DCA versus are you DCAing for me, right? And it's like, okay, am I DCAing at prices that are way over value, or am I DCAing at prices that are within fair value, right? Like if we're ranging sideways and say we're on Bitcoin, for instance, and a range, for instance, let's say is between 25K and 30K, do I DCA at 30K or should I be DCAing at 25K? Well, I'd arguably say I should be DCAing the lower range of that area. And that's kind of what we're talking about too when we're talking about this, market pullback that could potentially be coming. That, these are kind of areas where you can look to enter the market in a smart way and really capitalize on the downside, not go all in at 15K because 15K is the bottom, right? It's more about being smarter with your money versus just throwing it all in an area and calling that the bottom or calling that a top or whatever.
Well, yeah, I mean, because you guys know I've been bearish on altcoins for like 18 months now, and it's exhausting. But, every video that I put out there, people are like, well, does that mean I should sell my altcoins? And I'm like, well, probably not. Like, the time to do that was 18 months ago, or 12 months ago. I think the risk that a lot of people run is that when they sort of watch a video and then they go panic sell, or something, they run the risk of being just the next local low, or lower low, and then the market bounces for 2 to 3 months, right? And it doesn't mean that is the low. It just means that it could be the low on that altcoin on their Bitcoin pairs for the next 2 or 3 months before they eventually roll over and put in a lower low. But the issue is that what normally happens is people sell, then the altcoin bounces, and then rather than be patient and wait for the fundamentals to sort of prevail and for cooler heads to prevail, they then YOLO back in at the top, right? And then the market rolls over, and then the altcoin puts in a new low. So yeah, I mean, I think the general thing is, like, you know, if you didn't get rid of your altcoins and it's now, you know, Q3 of 2023, like, I'm certainly not suggesting, like, you know, you should go do anything, right? Yeah, but I think it's certainly a good lesson for a future cycle, where it's like, you know, if you get to the point where you're looking at it and you're like, well, you know, the dominance of Bitcoin's at like 39%. Normally, this is a pretty low level. Normally, altcoins get wrecked from this level. That's normally a good spot to sort of get out of the altcoin market and put it in a Bitcoin or put it in a USD. You know, 18 months out into the reckoning is certainly a very risky area to start making that trade, because there's always a chance that you sell the one altcoin that starts to outperform, and the 10 others that you don't sell are the ones that keep going down. You know, I mean, there's actually some altcoins that have done well, right? I mean, there's some that have. There's some that have put in higher highs. It's just that collectively, most of them haven't, right? That's the hard thing, right? Like, you can put out a thesis on the altcoin market, but there's always someone that's like, well, what about this altcoin that has, you know, a $10 million market cap that, you know, you somehow didn't know about, that went up 2x last week, and I didn't buy a bag because you were bearish on altcoins, right? You know, it's not that. It's just that most of them underperform Bitcoin during this issue. Yeah, timing the market is very difficult. All I do with Bitcoin is just DCA at various risk levels. All I do with the S&P is DCA at various risk levels, and I leave the market timing to the experts, as they say.
That was pretty funny there, Ben. I've seen a lot of those guys on Twitter. They just, you know, if you don't catch every single move and every micro cap, then you're just not a good. You don't know what you're doing. You know.
Well, it's funny because I'm like, well, why don't you? They only ever give me a hard time about altcoins, like micro cap alts. I'm like, why don't you give me a hard time about Carvana? Like, it just pumped 1,000%. And I didn't tell you about that one. So they don't care about that one because it's not an altcoin. You care about this random altcoin pumped up 100%.
Max, remember Carvana?
Funny enough, we were doing some analysis on Carvana before the pump, and I was telling Will that it's going to be in chapter 11 soon, and he said, I don't care, it's going to pump. Lo and behold, it did. There's
a lot that Bed Bath & Beyond did chapter 11, right? And then it pumped up a lot, and then it still went to zero.
Yeah. Carvana has a date with zero, I think. But
it's funny because it's like, you know, there's no markets don't have to be rational, right? Like, they can. I still remember watching Bed Bath & Beyond like pump like 300% after it filed bankruptcy, and then it still went to zero. And I'm like, why are you buying it? You know, like, I mean, the joke is on me for a short period of time when it's up 300%, you know, but then eventually it just goes to zero.
It's an interesting day when you kind of come to terms and you make peace with the idea that the stock market is actually maybe even more scammy than altcoin markets, and it has the same scamonomics at times. So,
well, you know what I would say? I really like the altcoin market in the sense that it makes a lot more sense. Like, it is tracking net liquidity, right, pretty well, unlike the equity market, right? So that would tell me that when QE comes back, it probably won't immediately lead the stock market higher, right? Because again, it'll take a while for it to filter through and for companies to start being more productive. But for altcoins, they were never productive to begin with, right? So all they need is just liquidity, and they can start going back up.
Well, let me ask you this, Ben. I kind of view like the Russell 2000, like total 3. How is the Russell tracking global net liquidity?
Here's the thing about the Russell, and I let me just pull it up really quick because I've actually been following the Russell too. The Russell is interesting because it's kind of like, it's sort of like the altcoin market of the equity verse. And you can see what I have drawn on here. But look at this pattern that the Russell does. Like, here's the end of 2014. It then rallied in 2015 until guess when it topped out? It topped out in July, in fact, in 2015. And then we had a recession scare, and then it put in a lower low. Even though we didn't have a recession, it put in a lower low. It was just the scare of a recession was enough to make the Russell 2000 put in a lower low. And then in 2018, we had a low, it then rallied in the pre-election year, and then it put in a lower low, right? So the last 2 cycles, we saw it bottom out in the midterm year, rally in the pre-election year, and then put in a lower low in the election year. Same thing this time so far, right? A low in the midterms, rally in the pre-election, and then potentially a lower low in the election year. But the interesting thing is that over here, it was a higher high, right? Over here was a lower high, right? So there's no way to know if it's going to be a lower high or a higher high. The thing is, you know, here when it was putting in a higher high, it was halfway through the pre-election year, right? We're already halfway through the pre-election year and it still hasn't put in a higher high. In 2018, right? Like over here, it really took until like the very beginning of 2020 before it topped out, and it still wasn't a higher high. So I would say, I mean, given how badly the Russell got hit, there's certainly a case that it doesn't put in higher high. Like maybe it rallies up, but it doesn't necessarily have to put in a higher high. And that's, I think, the risk. And what's interesting is, again, just because it was a higher high didn't mean you didn't get a lower low. Another interesting thing about this is this low in 2016 is the same low as 2020. Like, how funny is that, right? Like that it literally went to the same.
It's like a giant range. Imagine if we came back to it a third time.
Yeah, I know. I mean, I don't know if it will, but like it's been sort of in this massive range here. And I think that's sort of the risk. But yeah, as far as your question, like how is it tracking global net liquidity? I can pull it up. It's not as closely tracking it as the altcoin market, is sort of the short answer. But it's not. The jaws haven't opened as extreme as the S&P, but the jaws opened in June, right? So the S&P, the jaws opened in like April, well, late March, early April. For the Russell, the jaws didn't open until May. And I mean, I would argue that eventually the jaws will probably clamp shut, but and this is a potential area that, you know, has provided some resistance for the Russell right here. So perhaps this is where it gets some form of a correction. But yeah, I mean, I wouldn't be surprised to see the Russell, you know, push higher eventually before potentially rolling over into a recession. And perhaps 2024 is the year to be more concerned about, right? For a lower low, because that's what we've seen, you know, last 2 cycles, right? Low in the midterms, rally in the pre-election, lower low. And the interesting thing, by the way, each of these lower lows occurred in Q1 of the election year. The reason why I find that fascinating is because it's right before the halving, right? It's right before the halving. And there's one more thing I want to show you. I know we've talked a lot about .com, right? And the altcoin market. I think that if you exclude Bitcoin and ETH, right, I do think that Total 3 has been tracking the .com market fairly closely. But I want to show you something really interesting here. So look at Total 3. So this is the altcoin market, right? This is the 20-week and the 50-week SMA, right? So this is your 20-week and your 50-week, okay? And you'll see that we sort of put in a low, we then put in a lower low, and then we sort of had a double top, right? A double top, and then a higher low, and then now we're potentially getting rejected here off both the 20-week SMA and the 50-week SMA. Now, there's a really similar comparison to be made here with .com. Like, look at this chart, right? So look at the 20-week and the 50-week here. So you have the same exact thing, right? You have a low, you have a lower low, then you sort of have your double top, right? That got rejected right around that 50-week moving average, just like we did over here. You then put in a higher low, bounce back up. The argument is what if Total 3 is right here, right now, right? What if that's where we are? Like right at
dear.
Where it put in a lower low the end of the year. It then bounced, put in a double top, right? This is exactly what Total 3 did, right? It put in double top, right? A higher low, rally back up on the Ripple SEC news, right? Only to potentially get rejected at both the 20-week SMA and the 50-week SMA, just like it did in March of 2002. Now, what's interesting is if you take a time frame on this, from this peak here, from this lower high at the rejection point and take it to the end, it's 30 weeks. The reason why I like that, the reason why I think that's funny is because 30 weeks from now, guess where it puts you? It puts you in February, I believe. So 30 weeks, February of 2024. What happened? That February of 2024 is 2 months before the halving. What happened 2 months before the halving last time? The altcoin market bottomed, right? 2 months before the halving last time, total 3 bottomed in March of 2020. 2 months before the halving, right? So if the altcoin market continues to follow .com, and then we just go into a 30-week bleed, which would be very painful, right? But if it did, then you're looking at a potential bottom in early 2024, just when the Russell typically bottoms out, right? Which you asked about, right? You asked about the Russell, right? It tends to find out, it finds a low sometime in the early phase of the election year. I think there's a lot of confluence around that. And the reason why I still lean that direction is because the dominance is still so freaking low, Like, and I look at this, this is a Bitcoin, right? Look last cycle, this rally from 40% to 60%, only half of this rally occurred during a Bitcoin pump. The second half of the Bitcoin dominance rally occurred during a Bitcoin dump, right? So same thing over here, right? The first half of the rally occurred during a Bitcoin pump from 40% to 50%. What happens at the second half of the Bitcoin dominance rally occurs from during a Bitcoin dump. So I think that's sort of what I'm looking at right now. And so I think, look, if come February of 2024, everyone's screaming recession because we now have an uninverted yield curve and everyone's capitulating their altcoins because they're like, oh, that's where you buy them, right? Like that's where you buy them for the cycle, because I think the altcoin market could very well bottom out like really early on in the recession.
And it would definitely give a lot of time, the necessary time for total 2 and total 3 divided by Bitcoin, those charts we talked about earlier, to actually reach that level of oversold, arguably. So
right, yeah. So you could have a higher low for Bitcoin, right? Like it could be 17, 18K. I mean, imagine if Bitcoin double bottoms, like where that would put.
I think it could, and one of the reasons I do is, charts, they like symmetry to a really spooky degree, and we had a double top. It wouldn't surprise me to see us double bottom. And again, maybe it's tinfoil hat, maybe it's not, but
right, yeah, no, and I mean, like I can appreciate the other side of the case as well. I mean, look, a lot of people have been very bullish on altcoins for a while, and some of them have done well. Most of them have not. My view is that like I'll become more interested in the altcoin market once the Bitcoin dominance is 60%, wherever they are on their USD valuations, because I think that even if they're higher on their USD valuations, if the dominance is at 60%, I could still convert my Bitcoin and get a hell of a lot more altcoins than I could if I convert, than if it's at 50%, right? And just like converting your Bitcoin when it's at 50% dominance gets you a lot more altcoins than it would have when it was at 40% dominance.
For sure. I would love to see Bitcoin dominance go to 60% before this is all said and done. I like that target.
I certainly think it will.
Yeah, I mean, I was just going to point out, this is a target we've been looking at for a while at BB, where we're just looking at the falling wedge here.
That 250 billion is I've had my eyes on that for a while, so
yeah,
we'll see.
I would say one thing about that, because I think one of you guys mentioned, right, that you thought the S&P could go down to the pre-pandemic high. Is that right? Eventually?
Yeah. Eventually, yeah.
So just one thing to consider here. So, and again, if you can look at my screen, Bitcoin at its pre-pandemic high is at 12K, right? The S&P is at 3,400. Where does that put the altcoin market, right? If you just look at this chart, it would tell you it goes to 100 billion, right? Which is really far down from where it is right now. But there's a nuance to it. And you guys were talking about this in your stream yesterday that I tuned into, right? I tuned into it.
Thank you for tuning in.
yeah, as I was watching it. And the nuance to this is that a significant portion of the market cap is now the stablecoin market cap, right? And again, if you go look at it, just quickly, if I just really quickly pull it up. So I'm just adding up USDT plus USDC plus DAI plus the BUSD market cap. And that is at 118 billion, right? I mean, it is trending down. It is certainly trending down right now. Does not look like a great chart at all because it's just been slowly trending down, basically since May of 2022. But if you add on, let's just say 100 billion to total 3, then that gets you to 200 billion, right? Which is much more reasonable, right, of a target for total 3. So if you do see total 3 kind of go into that range that you guys were talking about, like 250 billion or so, let's say it comes back down and does something like this, like that could be sort of that sweet spot, final capitulation zone, recession scare. Everyone's capitulating their altcoins because the recession is here. But what they don't realize is that when the recession gets here, and if inflation is back down to 2%, which it could be if a recession comes, because when a recession comes, the one thing it does good at is getting inflation back down. Like it kills inflation when a recession arrives. The thing people forget is that when you get that, that's when the Fed pivots. And that's when excess liquidity comes back. And that's when the true altcoin season begins.
Yeah, no, absolutely. I think this is a really great place to wrap up. We've been going for about 2 hours. We've discussed a lot of charts. Ben, thanks for being so generous with your time today. It's always a treat to speak with you on Twitter, and thanks so much for coming on our YouTube. Thanks for supporting us. Like you said, we're a really young channel, and I've given some encouragement to our team. As I mentioned, I've been a premium subscriber of yours for years now, and I was sharing your YouTube and Twitter subscriber and engagement charts from your website with them. And I said, guys, if we just make it to one bull market, we'll be good. You know, we show up every day, you know, market conditions must dictate. So
how long has your channel been around?
I mean, less than a year, So yeah.
I will remind you guys, because I think I told you guys once before in Miami, it took me 6 months to get 500 subscribers. Okay. 6 months. And it was a grueling process. And you guys have 2,000 subscribers, right? So you're doing pretty well. I mean, considering where you are, right? And I started my channel in the summer of 2019. So exactly 4 years ago. So just keep at it. And again, like if you guys are watching the channel, and you're not subscribed, make sure you subscribe, right?
Ben, you're too kind. You're way too kind. All right, now I got to do you a favor, guys. Like I said, I've been a premium subscriber of Ben's for years now. He's the only paid service besides my own that I will endorse without any question. Go to Ben's website, sign up for the lifetime immediately, because I promise you it's going to save you and make you a lot of money.
That's fine. They don't have to do that. I really just want people to focus on the thing is like at this phase of the cycle, like the simplest thing to do is just keep your head down, like focus on Bitcoin and just wait until the dominance is higher. And then that's when you make your move on the altcoin market. It's really simple. It just is. It requires a ton of patience, right? A ton of patience to get through. So yeah, everyone subscribe. Let's try to get them to 3,000 subscribers. And that helped them out a lot.
Oh, thanks a lot, Ben.
Ben, it's been an honor. Dubiously speculating with you. Hopefully we get to put on our rally caps, get out of the sandbox, and be out of the woods by this time next summer, man.
Yeah, I hope so. I think I've sort of said that I think the summer of 24, I mean, we could be the altcoin market could actually be in an uptrend by that point. Imagine that, right? Imagine that.
Yeah, that'd be something. Well, guys, thanks so much for being here. If you're in the audience, we are Because Bitcoin. We're a financial media company with a very heavy emphasis on digital assets. We're all a group of very active traders as well. Please follow our Twitter if you haven't yet. We're very active on there. Subscribe to the YouTube channel. Go to Ben's website. I don't care what he said. It's an amazing service. Nobody in the business does it like Ben. So definitely go check that out. Yeah, guys, thanks again for being here. My name is Max, and we will see you next time.